Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 16th of February, 2025. We're providing our regular weekly update for the week ending the 14th of February. Gold and silver continued to rise again last week, with gold surpassing well over $2,900 and heading towards $3,000, only to fall back again late on Friday. Silver exceeded $33, but like gold, fell back late on Friday. Why did this happen? Well, let's take a look. Now, before we actually look at the gold and silver prices, we'd appreciate it if you would give this video a thumbs up and most certainly subscribe to the channel if you have not already done so. Believe it or not, only 30% who listen to this video have actually subscribed. Gold rose $21 last week, rising from $2,862 to $2,883, having hit a high of $2,944 and a low of $2,861, a rise of 0.7%. Gold spread between high and low was $83. Last week we predicted gold would trade between $2,810 and $2,950, which it did comfortably. In sterling terms, gold fell £25, closing at £2,292, and in euros it fell €25, closing at €2,750. Silver rose 33 cents, rising from $31.84 to $32.17. Having been as high, though, as $33.46 and as low as $31.30, a rise of 0.3%. The difference between its high and low was $2.16. Last week we predicted silver would trade between $30.80 and $33.25. It did rise briefly by 21 cents over the upper level, but promptly fell back within the range. In sterling terms, silver was down 11 pence, closing at £25 and 64 pence, and in euros it closed at 30.69 euros. That's down 0.20 euros. Gold-silver ratio fell ever so slightly from 89.9 to 1 to 89.6 to 1. Bitcoin is currently standing at $97,500. That's up $700 on the week. U.S. equities broadly higher. Dow Jones up 243 points at 44,546. The S&P 500 up 89 points at 6,114. And the Nasdaq Composite up 503 points at 20,026. FTSE Index was also up 32 points at 8,732. So the markets are perhaps responding positively at the moment to these threat of tariffs. When perhaps they bite might be a different matter. Looking at oil prices, Brent crude was up 8 cents at $74.74, and WTI crude down 26 cents at $70.74. The dollar index was down 1.33 points on the week at 106.71, so a bit of a jolt there. Now, last Wednesday we saw inflation by way of CPI rise a little higher than anticipated, with the year-over-year rate rising from 2.9 to 3%, and the core year-over-year rate rising from 3.2 to 3.3%. Markets were expecting it to fall ever so slightly. Fed Chair Jerome Powell played down a little the rise in inflation, basically stressing that one or two results does not mean that the Fed is not on track to eventually achieving its 2% inflation rate goal. That said, there is now no doubt in markets that there will be no rate reduction until at least June. Thursday's producer price index for January was lower than December, but 0.1% higher than anticipated, and that's usually a forerunner or predictor of inflation. US retail sales on Friday, though, showed quite a fall, minus 0.9%, compared with plus 0.7% in December, some 0.7% lower than what the markets were expecting. Markets suggest that wildfires in California, severe winter weather, and post-holiday blues depressed spending. Now, this coming week, watch out Wednesday for the FOMC minutes, which will be released, and flash PMIs on Friday. Also on Friday, we have the consumer sentiment figures for February, but not a great deal of data coming out of the US. More attention, though, will be paid by traders to the comments many Fed officials and governors will be making during the course of the week. So, we have an interesting mix of trade war fears and their potential impact on inflation, with reciprocal tariffs sparking uncertainty. Higher than expected inflation tying the Fed's hands from reducing rates much before June, and weaker retail sales hinting at an economic slowdown. Not a pretty or easily predictable picture. And so it's difficult to anticipate what's likely to happen until we see at least the PCE inflation data, but that's not due until the 28th of February. The result of this is that gold really attempted a rally to $3,000, but the fallback on Friday is either a little concerning or is some much-needed profit-taking. Technical analysts fear a bearish reversal signal, and should gold drop below 2853, then that is likely to confirm a further descent to the 20-day moving average at 2,817. If that is breached, gold could well fall to 2790 and then further to 2772, at which level, however, there is strong support, at least short term. Silver rallied on Friday only to fall back again towards later trading. During the week, it broadly meandered gently in positive territory, but with no great enthusiasm. Any potential slowdown in the economy could have a depressing effect on silver, as well as the prospect of interest rates remaining high for longer than the market would like. However, silver could see eventually a rally to $35. But beyond that, it's going to struggle at least for the next few months. But equally, it could fall back again to $31.50 territory. The lack of much financial data coming out of the US this week does suggest that precious metal prices will be more determinant on geopolitical news and any further tariff announcements coming from the White House. Traders may indeed sit on their hands a little until the end of the month, when the PCE data is announced, and we should not be surprised if this happens. US and Russian officials, though, geopolitically, will meet in Saudi Arabia in the coming days to start talks aimed at ending Moscow's nearly 3-year war in Ukraine. A US lawmaker and a source familiar with the planning said on Saturday. Ukrainian President Zelensky, who met with US Vice President J.D. Vance in Germany on Friday, said Ukraine was not invited to the talks in Saudi Arabia, and Kiev would not engage with Russia before consulting with strategic partners. Whilst the settlement between Ukraine and Russia may reduce some of the war premium in precious metals, if handled incorrectly, could spark quite a battle between the US and Europe, with Great Britain's Prime Minister already stating they will stand by Ukraine through thick and thin. Let's see how strong a stance Europe will take if the US removes its funding from the conflict. So, where do we forecast gold and silver this coming week? Well, gold, we're expecting to trade somewhere between $2,820 and $2,940, with, if it goes south, 2,775 being the ultimate low and 2,950 as its ultimate high. Silver, we expect to trade between $31 and $33.50, with $30.25 and $33.75 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to our sister channel, Finances Do Matter, which has stalled a little, but albeit temporary, and subscribe there, ready for its new push. Thank you again. Have a most prosperous week ahead.